All right, what's going on, everyone? Hope everybody's had a good week so far. We've had some crazy volatility, some wild moves so far this week, and I expect nothing to change going into tomorrow. I expect higher volatility as long as up until Jerome Powell's speech tomorrow. We have a slew of data coming out tomorrow morning, so I expect most of the day's direction basically on this, but I don't expect a higher volume until what Jpow says. I think a lot of investors and a lot of hedge funds and everything will be waiting on to see what he says and really where to be able to tell where the market's going to be able to go forward. So tomorrow morning we have mortgage applications, ADP employment change, GDP numbers. We have a slew of data coming out, so a lot of this is going to be able to push the market in whichever way in the morning. So I want to go a little bit of a recap on the Fed minutes. So we saw some both hawkish and dovish comments. If you don't know what the hawkish and dovish means, is hawkish is bad for the stock market, dovish is good for the stock market. So hawkish comments was various participants noted that their assessment of the federal funds rate that would be necessary to achieve the committee's goals was somewhat higher than they had previously expected. So this just basically the federal funds rate is just how the percentage of how high they expect to rate hikes over time. So if they continue to raise that number, remember the stock market is forward looking. It's not the economy. So if that federal funds rate continues to go up, and that just basically means that they're going to continue to rate hike longer, not specifically higher now. We've had 475 basis point rate hikes in a row. I do not think that we may start to kind of go away from that, just mainly because of that CPI data. I think that we could start to see that 50 basis point rate hike, but I do not think that we pivot or that we back off anytime soon. I think that we raise the federal funds rate and we start going with 50 basis point rate hikes because they can continue to do the 50 basis point rate hikes, but also continue to rate hike in general. Now the dovish comment was a substantial majority of participants judged that a slowing in the pace of increase would likely soon be appropriate. Now, soon is a very important word. The Fed minutes have these very specific words, and all of this wording is very specific. Soon is the main question. How many a lot of investors are betting on December's 50 basis point rate hike. If they come in with a 75 basis point rate hike, that is super, super bearish for the market. Now, I do not think that if they come in with that 50 basis point rate hike, that is specifically good for the market, and I don't think that we specifically rally on that, just mainly because of the federal funds rate. Now, what will Jpow say, and which Jpow will we get? Now, in the Fed minutes, it has kind of gone both ways. We see the raising interest rates longer, but we see that slower pace. So the question is, will we get a Jpow that comes out that used to be before Jackson Hole that was super good for the market, or will we get that's after Jackson Hole Jpow and be completely bearish for the market? So I really think that Jpow is going to come out pretty strong, honestly, because the stock market's doing a lot better. We've seen a bounce in the stock market. We still see the labor market tight. We see bonds. We see the bond market easing a little bit. Yields are coming back. I really think that we see a very bearish Jpow. He will reiterate that the economy is still strong. It's resilient. Yes, we have inflation going down, but the question is, will he mention slowing rate hikes in December and the terminal rates? You have to keep those 2 points very clear. So, looking here at SPY on the daily chart, we can see this daily MACD finished its bullish point. It's right up here at the top, right here at the very top, right here where we were last time. We are in this rising wedge. We kept trying to break out multiple times, but it did not happen. We're losing strength here. We're starting to get where we're going to start heading back down very soon. The 12 on the 12 and the 26 on the MACD is very close to crossing. If we break through this support and we come back for this retest, it is put city, and that is just in time for that December, January last leg down before we start to get kind of bullish. Now, looking at SPX here, you can see today that we bounced right off that major support here, off that line. So it mainly depends on what Jpow is saying. Now, if you look at it at a technical analysis standpoint, it's all setting up for a very hawkish Jpow. But remember, technical analysis does not trump news or anything like that. Any news media or news that comes out, macro environment, macro news, nothing of that. All of that trumps technical analysis. But technical analysis can help you with that entry and exit points. If you look right here on Apple, we kept trying to break out, but with no avail, and we're heading right back down on the daily. So I think we still see that continued push down. We have a little bit of support if we continue around 135 to 137-ish range, depending on where we hit that. So we very well could continue to see a little bit of a bounce soon, but right here on futures, you see bouncing right here off the support. We could very well gap up a little bit in the morning, but long-term range right now, I am looking at very bearish news, and along with this image that I took earlier today. Now, if you're not familiar with this is what's called bearish divergence. So this is the relative strength index. The relative strength index is going down. You can see this clear downtrend on the relative strength index, or the RSI, while the stock market or the stock price is continually going up in this trend. This is what's called bearish divergence, and this is normally very, very bearish, and actually can be a very sensitive clue on where we start to head down. We have multiple gap fills at the bottom. We have one gap fill around 380 to 381 area, and then that really big gap fill that I'm watching right here at 357, 358 area. I have a $374 put on spot that expires on January 20th, if anybody's wondering. Yes, I am very bearish long term. I think that we get one more hard leg down before we finally start trying to pick up and start heading up with recession news, stock, bond buybacks, and everything going forward. But we will play this week to week, of course, and we still expect Jpow to come in with that hawkish sense, that hawkish news, and I think Jpow will come in with very strong news saying that the stock market is doing better, the bond market is doing better, the economy is still strong. It's shown resilience. Credit card spending is higher. There was a lot of people spending money on Black Friday. Now, the question is will he come in with higher rate hikes or higher federal funds rate? So keep up with those two things. How high they're gonna rate hike in December, if he mentions anything about that, and the federal funds rate. You need to keep up with both of those things, because either one of those can make it from bearish to bullish very quickly. So if you like this video, don't forget to like and subscribe. Thank you for everybody that follows and supports us. Go ahead and continue to have a great weekend, and I will post my daily post tomorrow afternoon explaining a little bit of what Jpow says and everything if you don't get that. So see everybody this weekend.